So we'll just get started now. Thanks so much to all of our attendees for joining us this morning. You're here with us to discuss Budget 2026 and specifically how budget impacts your business. So on the panel this morning, we have Larissa Feeney, CEO of Kenor Finance and Business Services. So thank you, Larissa, for joining us. We have Tom Francis, Head of Accounting and Small Business at Kenor Finance and Business Services. And then we're delighted to have joining us today Neil McDonnell, who's CEO of Isme Ireland. A great voice for all the SMEs. I'll hand over to you all now to debrief on Budget 26 and the impacts that we can expect for businesses. Thank you.
Okay, super. Thank you, Christina, and good afternoon, everyone. Christina, you might unshare your screen.
Oh, I will, of course.
Is
Sorry.
that okay?
Yeah.
Thank you. So I think it was the Minister, Peter Burke, that said that this was going to be a budget for business. And I think we'll start with you, Neil, because Isme was very clear that you had asks under 5 headings: the cost of doing business, enterprise policy, skills and training, public funding and housing. Was it a budget for business yesterday?
I'd have to say absolutely not. You've given us you've gone through our 5 key asks. I would say I'm trying to be as positive as I can here by saying at least there has been an intellectual engagement with the housing issue. In terms of the VAT reduction on apartment building, in terms of the increased grant assistance on the dereliction redevelopment in 5 key areas, a 200,000 to a 300,000 movement there is material, and we hope it's going to get somewhere, and it's going to provoke a lot more redevelopment. There are other issues on the property side that are there. I would make the comment on the overall housing stroke property. This has been represented, unfortunately, in the media as, a tax break to developers. The Department of Finance put out a figure yesterday saying this would cost 250 million euro. I mean, this is unfortunately where we say we have to query the quality of tax advice available to the Minister for Finance. This VAT measure on apartments will cost the Department of Finance and the Exchequer nothing because these apartments are not been developed now. So reducing the tax take from 13.5% to 9% reduces the amount of tax the state would have received if these things were going to be developed. They weren't, and we know that from what's happening in the market. So there's a tiny bit of reality setting in there. In terms of other business issues that we had looked for, we see nothing obviously happening on the personal tax side. On the VAT issue for hospitality businesses, as a multi-sector agency, we represent lots of people who don't operate in VATable businesses such as childcare, nursing homes, etc. This is a welcome move, which we hope will compensate for the cost increases that are going to come elsewhere. On a standstill basis, don't forget, the labour rate is going to increase by about 6.5% on the 1st of January when you take the national minimum wage and auto enrolment into account. So labour cost is moving very, very significantly on the 1st of January. And overall, what we see in this budget is a massive movement on the social account. So current spending has gone up a lot. But when you look under the bonnet, the biggest kind of single mover here is 2 billion on social protection when we're in a market that's That's an 8% increase on 2025, an 8% increase in social spending when inflation is running at 2%. At any time, a movement of that size has to have a big question mark over it, and we're raising that question mark now. The last bit I'm going to say is, and we're just doing the numbers on, excuse me, on training. We just got notification from SkillNet Ireland on on the SkillNet allocation for 2026. It is down 11.5 million euro. That's down 18% on last year. And employers pay for this money through a 1% PRSI levy known as the National Training Levy. So the more we look at this budget, the less we're happy with it. Other people are complaining that you may have heard social justice and others complaining that things didn't go up enough. We're looking at budget allocations for 2026 that are going down, while the National Training Fund is 2 billion in surplus. So quite frankly, we are very, very disappointed in this. This is not a pro-business budget.
Yesterday, whenever we spoke briefly, you had said, Neil, that you were, if I remember correctly, you were hoping for a doubling of that skills and training budget or allocation, and now it looks like it's gone down. So that's not good. Tom, before I go to you, Cindy has just put a comment in where she says, I understand budget has been given to Minister Burke's office, but it remains to be seen what our startup landscape will actually see from it. So far, there is little to no financial support for new businesses. I have yet to see how Budget 26 makes provisions here stand to be corrected. And I think we can probably all agree with you there, Cindy. There's very little for the startup that I saw yesterday. We could maybe point to the R&D credit a little bit, but that doesn't apply. That applies to very, very few. Okay, Tom, maybe we'll start with you then in terms of what actually happened yesterday. We can go through the various different headings that ISBE has set out, and that might be a good way to structure the various different measures. If we look first of all at the cost of doing business, Neil's mentioned the VAT reduction, so that was in hospitality and hairdressing only, as far as I understand.
Yeah, absolutely. I mean, in relation to the VAT, it was very limited to the hospitality and the hairdressing actually. So I suppose it will provide relief somewhat to costs, but I suppose there's a higher cost there as well, where you have a lot of the bigger multinationals or the bigger national food chains are potentially availing of that as well. In relation to the tax measure supporting business, to Neil's point, there's very little. I mean, we were looking at the budget yesterday and we were kind of scratching our heads a little bit as to what's just happened here. The businesses, very little there. There had to be the strong focus on property development for obvious reasons. It wasn't an election budget. I suppose it was very light on agri farming, and the ordinary worker got very little. In fact, there could be 500 euro or so worse off now because of the lack of inflationary measures on the tax credits and bans. But with regards to the business then, Larissa, you mentioned the R&D tax credit, for example, and that tax credit is designed to support innovation and product development in SMEs and multinationals can avail of that. So the budget announced that the tax credit itself will increase from 30% to 35%, and adjustments to the first year payment increasing from 75k to 87.5. So I mean, it's potentially good, but there's a big challenge with the R&D tax credit. We know anyway is that it's really complex. It's really complex to to be eligible for it. There's a lot of documentation to get there, and it does often require specialist tax advice and technical support. Now, Minister Donoghue did announce that he's going to publish an R&D compass in the coming weeks, which from what I can understand anyway, he's looking at targeted changes to hopefully make that less complex. The devil will be in the detail, I suppose, in terms of the finance bill when that comes through. But certainly, look, it's definitely welcome. But for a lot of the SMEs out there, it just might not be the saving grace they're looking for right here, right now.
Are we hopeful that we'll see a simplification of the R&D process whenever we see the detail?
I certainly would be somewhat hopeful, based on certainly the commentary I've heard. There's an acknowledgement that it's very complex. I know that the Tax Institute is making, they've made submissions already around that area, and so hopefully the fact that that's been acknowledged through the R&D Compass, let's see, it needs to be made easier to operate. I know from preparing and submission R&D claims for our own clients that before you can even make the claim, you have to make pre-notifications, for example. And if you don't do that, then you go into the trouble of making a claim. They won't, you can't get it effectively because you haven't told them you're going to apply for it. So little things like that kind of catch you out. So you spent the money, and you could be at the loss here 30 or 35% for the first, for that credit, which can be very difficult. It is a great credit if you can get it, but at the moment, I would say it's probably the larger SMEs and multinationals that are availing of it.
I would love to see it more in line with the UK model, where it's much more widely used than it is here. Okay, cost of doing business then. So we've seen a reduction in VAT for certain sectors, but we've seen a widespread increase in the minimum wage of 65 cent, I think. What did you say, Neil? 6.5% overall, including auto enrolment. So that's a huge increase coming the 1st of January. And the VAT, of course, saving doesn't kick in until mid-year. As I was told this morning, it won't be seen until the September payment goes out for VAT returns, almost 11 months, or 11 months away, yeah.
Yeah. And I think that a lot of businesses haven't even processed what's about to happen with auto enrollment at this stage. I know from speaking with our own clients, there's things to do now pre 1st of January. They don't know what to do because there's a lot of noise out there, but in terms of action points, what to do. So you had that 1.5% coming in January, you have the increased minimum wage. So it certainly looks like it's going to get a little bit more expensive. There is that saving on the VAT rate, as you said, not coming until July. So in the meantime, it certainly looks like costs are going to go up the way.
Anything else in there?
It's worth saying, Larissa, that the minimum wage now is effectively in round numbers. We talk because the narrative is, it's just 65 cents an hour. It's 29,000 euros a year. And I'm speaking as a member of the Low Pay Commission, so I have to be a little bit circumspect in some of the things I say. But if you look before the minimum wage started going through its large increases in the last 2 years, less than 7% of advertised vacancies on the likes of Indeed and so on were at the minimum wage. Last year that rose to 15%. It doubled last year. So the minimum wage is now seen at irrespective of what people feel within the trade union movement and what represents a living wage and so on, in terms of market position, and we've yet to see what the effect on that is this year. But the predicted effects of increasing the minimum wage at the rate it has done was we've gone from 7% of jobs advertised at the minimum wage to 15%, more than a doubling in 1 year. The other soft factor that we've seen is a decrease in job availability, anecdotally, for young people. So the starter job, employers that would rather take an adult they can employ at that rate. The other factor, of course, which everyone forgets about the minimum wage, is it's not just about people who are on 13 euros 50 today. And again, anecdotally, but talking to people who run businesses at a run rate of kind of 27, 28,000 now, it leverages all wages really up to about 35,000 a year. So this is what's called a spillover effect. When this was analysed by the University of Maynooth 2 years ago, despite the fact that all the business owners talked about spillover to the Department of Enterprise, nobody in the economics department in the University of Maynooth knew about spillover effects. and we're quite surprised to see how it impacted the wider labour market. So as Tom says, these things kick in on the 1st of January, and the relief in the form of VAT doesn't come until July. The last thing on AE, because the information that's coming out at the moment on the AE or My Future Fund is that you're in scope at 20,000 euro of income, which is, essentially 9,000 below the minimum wage. However, from a practical point of view, and we were at a session run by Welfare and the Revenue 3 weeks ago. Actually, the important number is 5,000 euro. And many people may not be aware of this. So workers who breach a gross earnings of 5,000 euro between now, the second week of October, and the end of 2025 will have an AE deduction made on their behalf. A lot of people aren't aware that it's run on a 13-week look back with the gross annual amount divided by 4.
Oh, wow.
So
Okay.
So
That's interesting.
And the sorts of places that typically do a lot of business in Q4 are
Yeah.
hospitality,
Retail.
retail, and they are places where they're going to have people who will make most of their overtime in the next quarter, and then their earnings will fall off. But they will have an AE deduction made in January. So that's a point of detail that the Department of Social Protection has not been good at getting out to employers.
I didn't even know that, actually. So that's really interesting. And I think there will be a lot of more content around auto enrollment over the coming weeks. So it's really important that we all get to know those rules very quickly. Can I move on to enterprise policy? The one that stands out to me under enterprise policy is the increase in the entrepreneurs relief from 1 billion to 1.5. So Neil, you're kind of shrugging there. So you're I'll ask you for your take on that first before I go to Tom.
Yeah, look, in absolute terms, that looks huge. It's a 50% increase. When I looked at the tax expenditures this morning, in absolute terms, sorry, I've lost the bloody page. I had prepared for you, Larissa. It's actually a very small amount of money. A lot of people think of this as a tax dodge. We have loads of people in membership who exit a business where they might have put 20, 25 years work in. And what they're looking for is not to pay 33% on tax on exiting their life's work, when half the time they wouldn't have even been making the minimum wage. But from a social benefit point of view, what we're looking for there in extending that limit is that they typically are the people who do not. Now, some of them do, but typically you have two types of people who exit. You've one that sort of goes into the chairperson role and oversees and manages other business. There's the other one, and typically they're the sort of person who exits in their 40s or early 50s, and they either start again or they become an angel investor. And you get a multiplier effect when those people have money on the table and are able to reinvest. So people who think that this is giving money, this is some sort of charitable donation to entrepreneurs, frankly, just don't understand how this non-PAYE aspect, this non-day job sort of thing works. So we're actually impoverishing our startup and our scale environment and ecosystem by having a limit that's so low. There's loads of other stuff they didn't do on the entrepreneurial. Look, I'll take this one and say thanks very much, but the whole entrepreneurial scape environment does not work at the moment. It was really, really disappointing. Again, we very politely suggest to the Department of Finance, it's very difficult to do this diplomatically, but that they should be talking to people like you in the years lead up to the budget. They should have you guys in the room now for what's going to come out in budget 2027, and they don't, and there is a real absence of that skill set that's required to stimulate the entrepreneurial environment. You guys and say the Irish Tax Institute, there are centuries of knowledge there that are not been used by the Department of Finance because it's a really sort of closed ecosystem in there, and that's why we end up with such a disappointing budget yesterday.
Yeah, no, I would absolutely agree. 1 million to 1.5, as you say, we'll take it. But that's the first move that we've ever seen in entrepreneurs relief, and again, it's well below what we would see on the other side of the water. We've also not seen any movement in retirement relief in 20 years. I'm going to say so that 750,000 remained as is, which is disappointing. Tom, was there anything else that you noticed under enterprise?
Just on that entrepreneurial relief piece, it was definitely a surprise announcement by all accounts, actually. Extending that threshold, but interestingly, that 1 to 1.5 for husband and wife, that's 2 to 3. So that's something, that perspective I hadn't thought of until I listened to other commentary on that. And it's for disposals from the 1st of January 2026. So I suppose just that's interesting in that regard.
So there'll be no disposals, Tom, from today until the 1st of January 2026.
Absolutely. I think absolutely strategic disposals is the way to go. Yeah.
Nothing else there, was there?
I like we had the KEEP schemes, the key employee engagement program.
Yeah.
And I suppose for anyone that doesn't know what the KEEP is, it's a tax efficient share option scheme. The idea being it's designed to attract and retain the key employees. But what Budget 26 did was it just extended it out, I suppose, subject to European Commission approval. So the capital gains are taxed at 33% and not 52%. We also had the special assignee relief program. That's a reasonably important one, I suppose, at the higher end. So it provides income tax relief for senior execs and specialists who come to Ireland to work. Now, what's happened in the budget 2026 is that, it's been extended for 5 years to 2030. However, the minimum qualifying income increased by 25% from €100,000 to €125,000. So in some ways, it's a welcome relief, but however, it's going to exclude a lot of people and might cause an issue for employers in attracting employees into the country as well. It's okay for people who are already availing of it, though. It's for new claimants. This new threshold of the 125. For the existing claimants, it's still at the 100K. So I think that one was probably not really welcomed insofar as the threshold's gone up. It makes it a little bit more difficult. However, existing claimants are okay.
I'd add to that, Larissa, like a sort of a summary comment about this. Now, first of all, Tom and SARP, we've often argued we'd like a SARP of our own for small businesses. Now, the extent to which the demand is there for that is a question mark. But the sorts of improvements we're looking at in the tax code are negligible. So, for example, on KEEP, I'm not an accountant now, but I do bring accountants in to meet the people in the Department of Finance. And when we raise the issue of these entrepreneurial things, KEEP, SURE, EII, and the fact that they're not working, they're blaming. I don't want to be indiscreet here, but their attitude is this is a problem with Brussels state aid rules. Now, frankly, we have a difficulty believing that because we see far more generous schemes abroad. But just to explain the level for your listeners, the level of failure of the KEEP scheme, I did find it, Larissa, was the KEEP scheme in 2020 had 37 businesses that availed of €200,000 of expenditure. In 2021, it had 32 businesses availing of 1.8 million in expenditure. It went down to 26 businesses in 22 at 1.6 million euro. And it just uses the symbol less than 10 businesses last year, and it was 400,000. So Keep is dead on its feet.
Why do we keep extending it, Neil? Why do we keep
honestly, we said to them, not to sound like Monty Python, but this is a dead parrot. This just doesn't work. It is pointless. People sitting down in the Department of Finance, putting up a scheme that has a usage rate of 400,000. It costs way more for the revenue commissioners to police this than it does. This is what this is kind of getting to the core of: do we have a lack of people like you in the Department of Finance? And the answer, when you look at things like Keep, has to be an unequivocal yes. We're seeing these schemes fail because they're overly regulated, they're too complex. The revenue and the Department of Finance's only priority is avoidance, not that they actually work. And this is, we half jokingly call it the Maynooth School of Economics problem. But if you put people into the Department of Finance whose only view of small business is tax dodging, expense fiddling shysters, you are not going to get a tax code that's fit for purpose. All you're going to do is set up an audit heaven. But we have parts of our tax code that are not doing what they're designed to do because they're overly complex, and they don't actually reward the activity that the state notionally says is good activity, like entrepreneurship.
Yeah, without a doubt. And am I right in saying that EIIS and SURE, sure, neither were mentioned yesterday at all in either of the minister's budget speech? Is that right? Yeah.
Both of those are also effectively failed schemes.
Yeah.
We were actually told to our face, the accountant that I brought in said, we'd love to help, but we don't know how to do it. Perhaps you'd suggest a replacement for those schemes. I mean, that's what we're dealing with in the Department of Finance. I don't mean to come down on our civil service, but if you're regulating and legislating in this area, you have to know what you're doing.
Yeah. I mean, and we've got startup businesses on the call, and we have more established SMEs on the call, both of which could benefit from simplified schemes across SURE, across EIS and R&D and Keep, and none of which are probably a villain of any of them because they simply can't. It's too onerous. Okay, so not a lot of good news under enterprise. Skills and training, Neil, you already mentioned that we're seeing apparently a reduction in funding for skills and training. Is that right?
Yeah. Now, of course, it takes the speeches that you hear on budget day on the tax and expenditure side represent about less than 1% on each. You have to go into the tax document produced by Finance and the expenditure document produced by Deeper. So I'm just telling you now, literally this morning, we had our email from Skillnet saying that their funding for next year has gone to, where is it?
What?
So Skillnet Ireland is going to get 54.2 million next year. That's down from 63 million last year. So the funding that's going to business training has gone down by 11.5 million euro. That's 18%, 1/8, while the National Training Fund is almost 2 billion in surplus. For those employers out there that don't know, but 1% of your employer's PRSI goes into the National Training Fund. It's meant to be spent on in-work and skills-based training. And Skillnet only gets 6% of that budget, now going down to 5%. And the rest of it goes to ETBs and is given out to NGOs and charities. Like I know, for example, a group like the Wheel just gets a €1 million per annum block grant from the National Training Fund. What they spend
Okay.
it on, don't ask me, couldn't tell you. But with SkillNet, and why this is a great scheme and why the taxpayer does really well out of it is, if one of your businesses runs a course that, say, has a day rate of €1,000, we can discount that for you to €600. You pay the €600 and we'll give you the €400. But the reason it's highly cost effective is, of course, the employer is matching the state contribution by a factor of 2 to 1. Whereas in ETBs, I can tell you, I'm not going to bore your listeners, but I can find an ETB in Dublin that's running a course that goes for 4 months on how to use your smartphone.
Yeah.
Now, this is an absolutely scandalous waste of, it's not taxpayers' money, this is employers' money that's been spent through ETBs. And we're already now, I've just had my team meeting this morning. Our SkillNet budget is shot now till the end of the year. ISME has no more money to spend on training other than committed programs. So anyone who's ringing us up asking to do a course between now and Christmas, we have no money. And government is cutting that by 18% for next year. So sorry, the idea that we're going to upskill our SMEs, we're going to do more, complete eyewash. This money is now going to be spent on reducing university fees by €500. Sorry,
There's a bit of a
sorry to sound
contradiction.
so annoyed,
Yeah.
Larissa.
Yeah, no, you're fine. You're fine. Be annoyed. And there's a bit of a contradiction though, isn't there? Because they're saying, okay, as you've said, reduction in training budget, 18%. But then there was a mention throughout the budget speech at some point about e-invoicing, right? And the move towards e-invoicing over the next few years. And Tom, for those on the call, because I'm thinking in my head, SMEs are going to have to be trained here on how e-invoicing works. And that's a massive shift. Tom, maybe for those on the call, explain first what e-invoicing is.
Yeah, so what Minister Donoghue announced yesterday was exactly as he described, the phased rollout of mandatory domestic B2B invoicing. And it's part of that VAT in the digital age, VIDA reforms, which really will, what revenue and the government want to do is focus on real-time digital reporting and e-invoicing. So basically that would replace any traditional VAT reporting systems. It's all online, it's all real time. And the idea being it's to create kind of a more unified / efficient VAT system across the EU. Now, this isn't just Ireland, this is across the EU, the EU-wide measure. Now, I suppose up to this point, we're a little bit shy in detail in terms of the detail and how it'll operate specifically. But Revenue is certainly expected to publish more details. But essentially, the key point with it is it's real time digital reporting and on the invoicing. So I think that'll be a massive shift actually for SMEs across the board, and probably costs as well.
Yeah, massive shift, and a massive shift in mindset as you know, as well as the practicalities of doing it. So the fact that training budget has been reduced is not good, because it will be needed.
Yeah.
I did see that Enterprise Ireland are getting more money though. Is that right? 1.3 billion. I don't know, is it all going to Enterprise Ireland or is some of it going to Enterprise Ireland? But I kind of hope some of it will go to startups in the form of grants. Have either of you seen that?
I haven't seen the detail of that, Larissa, but I suppose the technical difficulty always with EI is the broader state aid rules, and unless you're classified by them as a HPSU, a high performance startup, or you're an exporter, they can't really interact with you. And to bridge this gap, 2 years ago, they announced an expansion of the Leo footprint from micros,
That's
sub
right.
10 to smalls.
Yes.
We understand that hasn't really worked because the Leos locally don't have the resource to manage the smalls in addition to the micros. There are some other business issues with them as well. But part of our training effort in ISME, and I know among a lot of others, but most especially for us, is we are trying to educate and upskill our members to become EI clients. And EI has a stated goal of an additional 2,000 exporters. But, getting people to export does require training and a knowledge base, both of marketing, markets, and working capital finance. So, they're not going to do that on their own. And now it looks like our efforts to assist them are going to be stymied in 2026.
There was discussion at one point, you're referring micro to small, there was discussion at one point, if you remember, around establishing a third agency to sit between Leo and Enterprise Ireland and to look after those traditional sectors that aren't covered by either, really, hospitality industries, retail industry, for example. But that has gone by the wayside. I haven't heard about that in a long time. Have you?
Certainly not. It is. We do understand the sort of seeming contradiction in a business like us, that a trade association like us that looks for reduced state expenditure calling for another agency. But the fact is, if you look at economic performance in the business demography, the top of the pyramid are the IDA clients. They're effectively 100% multinational. The next layer down in terms of performance are the EI clients. EI will say publicly about 5,000 businesses involved. In reality, it's about 2,500 to 3,000. But they're still at the tip of the spear. They're really high performance businesses, and they're exporting. But the business demography below that, you're really just talking about that bit of the business demography. There's 340,000 odd businesses in the country, and they do not have a dedicated state agency. We're agnostic as to how this is achieved, Larissa, whether it is a sort of an adjunct office of EI or whether it is a national equivalent of the Leos, I don't know, and we frankly don't care. But what we see is that it's only the best educated and the most ambitious businesses in that layer below the IDA layer, which is basically American multinationals, and then the EI layer, which is high performance Irish businesses. But there's, you've only taken out of that 5,000 or 6,000 businesses out of a business demography of 340,000. So however it's achieved, whether it's the way proposed by Sinn Féin or some other way, we frankly don't care. But, it needs to happen.
We hear that all the time from clients. I mean, every time, it's one of the first things the client will ask us, is what grants can I get is what we're asked all the time. And for a lot of our clients, there are no grants because there's no, as you say, dedicated agency for them, and they don't fall neatly into either bucket. So yeah, definitely would love to see some progress in that regard.
Tom, I will say, Larissa, just credit where credit is due, because when you guys are getting asked about stuff, I will say that what Enterprise has done under the National Enterprise Hub is very useful. So in particular, when you want assistance on a particular issue, they have actually sat down and thought about this now, and they have reacted. So for anyone who's on the call and wants to know about grant assistance or something to do with export or something to do with finance, that's a great place to start, because it's readily searchable and you land on one page and you should find something in 2, 3, 4 clicks. So that has been a good thing. And we actually use it when we're assisting people, and here you go. But your question is correct. Curation of this stuff is a nightmare. There's something like 250 different grant supports up on the National Enterprise Hub, and some of them are so granular, it's a bit
I know.
daft. Anyway.
But that's good to know. That's good to know. And actually, I have another bugbear that I just can't not say, and that's how every local enterprise office seems to approach grants differently. And there's, whenever I work with especially the female entrepreneurs I work with, and we come together in groups from different parts of the country, and different individuals and different Leos will have availed of different supports, even if they have the exact same businesses. And that standardization of supports across the country would be also good to see. Okay. Moving on then to housing, Tom. So there's various different measures because housing does impact business, obviously. We always hear from business owners that are really limited in terms of getting talent into the country because there's simply a lack of housing. So what has changed from yesterday's announcement, Tom, in that regard?
Yeah, so there was definitely, as you said, there was definitely an emphasis on the housing infrastructure and development with, I suppose, some funding and probably some tax measures. The idea being that it will stimulate construction and somewhat support SMEs that are doing it probably. But the government, so they announced was 2.9 billion euro to deliver new social homes and fund second-hand acquisitions. The idea being supply and affordability challenges, address those. Uisce Éireann, there was 1.4 billion allocated there to sort the water and wastewater systems. So that's obviously necessary if there's more building going on. When it comes down to the SME builders, then what was announced was 200 million in additional funding to be made available through the Home Building Finance Ireland. And that is targeting SMEs and home building. So I suppose it is a boost to, I suppose, ultimately, like if capital can be got to do the work, it should obviously move things in the right direction, and boost construction capacity. But from a tax perspective, then we talked already somewhat, or we touched on the 9% VAT rate on the apartment sales. So they would have been 13.5%. So two measures. One was the 9% VAT rate on apartment sales, but that was alongside what they call the enhanced corporation tax deductions for apartment construction expenses. We don't know an awful lot about that at the moment, to be honest. The aim of the measures is to improve the viability of those multi-unit type developments. And from all intents and purposes, then the devil will be in the detail on what that corporation tax deduction piece means. I think we need to wait to see the finance bill for that piece. But with regards then to the further point then was on the Living City initiative. So that has been expanded. So there's now a tax relief to include residential properties built before 1975. And the cap then, there's a cap that it's gone from 200,000 to 300,000, adding in some new regional centres like Svatlow, Drogheda and Dundalk, Letterkenny and Sligo. What was noteworthy is they specifically called out the support that they want there for the conversion of the unused commercial space above the shops. We all know from walking down, the streets, that the upstairs are, they don't have any lights on in the evenings when they should have, with this property crisis they're having at the moment. That was called out, that they want to support the conversion of that unused space into residential units to help really revitalise the town centres and I suppose reduce vacancy, use space to stay already kind of thing. So they were the main headlines, Larissa, just in terms of property that I had seen.
Okay, thanks, Tom. Neil, what's your take on those measures? Is it enough?
Well, Tom is going to be way better able to speak to those from a financial point of view. I would say from an operational point of view, the reason they're important is I did hear the Construction Industry Federation talking this morning on the radio about welcoming those, and they're certainly going to be, they're going to incentivize the big guys. The reason, as Tom has pointed out, why the funding is so important is it's not merely access to working capital that's important in Ireland in construction. The small guys also have to deal with a huge amount of uncertainty, and B, timelines that don't exist in other jurisdictions because of our planning system. So, for example, you have a small builder that could be putting up an estate of 40 or 50 houses and has planning permission to do so, runs into a judicial review and hasn't turned a sod by the time it's cleared, and now you're out of planning permission. So the risk associated with this stuff in Ireland is really, really high. And at a time when there's a massive demand for housing, and you would think builders, they're leaving and they're going to the UK and they're going to Australia because there are full order books there. We also see that in the central bank outstanding finance figures. I think it's for those of you who have no life and read these things, it's table 14.1, I think, on the central bank outstanding debt figures. The guys whose outstanding debt is falling are the small construction companies. That suggests contracting balance sheets, not a good thing to see when we need more housing and more apartments. So I'm really hopeful that Tom's read on this is correct, and that the small guys will be able to re-enter the fray and build here, because we need absolutely everyone building at the moment, and in particular building apartments, because quite frankly, I don't want to subject any new couples to the sort of commuting I was doing 20 years ago. We don't want suburbs in the middle of bogs. We need to build up the middle of Dublin, Cork, Galway, Limerick, Kilkenny, Dundalk, Drogheda, and so on. That we need to get into urban living and 15-minute cities, not urban sprawl.
Yeah, and in that regard, we look to be moving in the right direction, however slow that may be. Can I ask you, Neil, about what was ISME's position under the heading of public financing? What was the ask there?
I suppose this is, I took a look at, and I haven't finished it yet, but IFAC did a look this morning, a flash report, and I would put it this way, the general view is this is an unsustainable trajectory.
Okay.
Again, when you're increasing your social spend by 8% in a 2% CPI environment and full employment, at some stage you go wallop. By the way, I think it's important for me to say that this isn't a government. I'm not bashing Fianna Fáil, Fine Gael and the independents. The people who I actually feel roused about this morning are the opposition. I haven't seen all the speeches on the Oireachtas website yet, but universally the complaint, and this reminds me a bit like I'm getting that 2005, 6, 7 vibe again, when sensible parties like Fine Gael and Labour were saying to the then Fianna Fáil coalition, spend, baby, spend.
Yeah, you're not spending enough. Yeah.
And we're not spending enough. All I heard this morning was social justice complaining about not enough on this, not enough on that. And you just want to reach out and throttle someone and say, it's gone up 8% in a full employment environment. And we have not done anything. We're creeping our PRSI up really slowly in an environment where our unfunded pension deficit is 470 billion on the social welfare pensions. And last time from memory, it's 170 billion on the public service pensions. It's nearly 600 billion in unfunded pension liability when our national debt is only 210 billion. What that means to the ordinary punters listening to this is, as the likes of me retires out of the system, you're going to see a really, really increased demand for PRSI and PAYE payments because none of that is funded. ISME made a proposal which we accept would have been hard to swallow, that all workers, nobody earning 352 euros or less pays any PRSI in Ireland. We said everyone should pay 2%, and workers on 442, which is the PRSI transition zone, workers on 442 euros a week should pay 6% on the margin, not on all their earnings, on their earnings over 442. Now, that would hurt a bit, but it would mean that all the part-time workers, and Larissa, not been sexist about it, but a huge number of women opt for 20-hour weeks to drop them out of the 352, go on to 20-hour weeks. We estimate our proposal would put about 850 million a year extra into the social fund. But our political class do not want to grasp the pensions nettle. Nobody does. If we had an opposition worth their salt, they would. So unfortunately, we're sleepwalking into an enormous pensions crisis over the next 15 years. The real reason we've let loads of immigrants in is that Deeper will concede, if you talk to them really quietly, that the population increase has kicked the pensions cliff at least 5 to 10 years down the road, but it's still going to happen. At some point, the social fund, which at the moment they say is positive because there's more money going into it in PRSI than coming out in pensions, but that's only going to last another year or two. And we do not have a fund for our old age and our public service pensions. They're all done on a PAYG basis, pay as you go. So that means that in about 10 years, our tax rates are going to start shooting up to pay for these. It's a really irresponsible budget, unfortunately, from a spending point of view. I mean, 1 out of 10 on this.
And what will happen in 10 years' time is tax rates will shoot up, and the employer contribution to auto enrolment will also shoot up as well as the employee contribution, because that's only set out for 6 years. That will continue to rise into the future as that fund starts to fall. We can all, I suppose, we can all see that. IFAC, which for those on the call don't know what it stands for, is the Irish Fiscal Advisory Council, I think. And so they have been pouring cold water over budgets since the last boom. And this one's no different. They've basically said that we're spending too much. The opposition has said that we're not spending enough. What I'm interested in is what you've said, Neil, there on the 8% increase in the social fund or social spend. Where is that 8% going? Because it's not going to childcare. You know, if we're talking about the impact on women, for example, or the impact on families, it's not going to childcare. So where is it going?
Most of it is in the what they call the in-work and the out-of-work spend. So it's going on old age pensions, contributory and non-contributory. It's going on job seekers, and it's going on child benefit, working family payments, fuel. It's a smorgasbord of payments all over the place. But to be doing it at that rate of increase, the problem is, we're told that the minimum wage increase and the 60% of median is to eliminate in-work poverty. It's never going to get there. The real source of poverty in Ireland is low work intensity households. And if this sort of increase was accompanied by an increase in DSP, Department of Social Protection interventions in low work intensity households, you'd be getting somewhere, but we're not. We've loads of people who are just doing, for example, ETB programs, who never want a job because they never want to come off the social and affordable housing list. We have an inbuilt determination to stop a whole cohort of people from working, and we don't like that level of intervention because we think it's not nice. But if you're living like that in these high welfare Scandinavian countries, your fixed welfare payments start to drop after 6 or 9 months or a year. They do not tolerate the sort of low work intensity households that we tolerate here.
Yeah. Okay. Okay. We are fast running out of time. Tom, very, very quickly, there was very little from an individual from a tax perspective, as I understand it. You touched on it slightly at the start where you said we actually might be about €500 worse off over 12 months.
Yeah, there was very little. And actually, I listened to commentary which reminded me of the PRSI change that's increasing this year as well. It wasn't announced in the budget yesterday, but it was announced last year, and it takes effect.
What was that, Tom? Remind me now.
So it's an increase in employees and employers PRSI to increase by 0.1%. So
that's right.
Yeah. So people had, wouldn't remember that, but certainly it'll be coming through as a cost. There was a change to the USC band. We talked about this earlier as well, the 2% band increase, but that's to take account of the minimum wage workers. So essentially that brings us up to 28,700. Neil mentioned the 29,000 number, so it's just kind of perfectly dovetails with that. So, I mean, apart from that, Larissa, there was very little on the personal. There was nothing else on the personal that I can see. So that's why I suppose a lot of workers might be worse off than the ordinary workers, because they might get a pay increase, brings them into the next band. So, so on and so forth, to be worse off. Around the BIK part, so they announced that there was an extension of the director employee BIK for electric vehicles. That's the zero emissions until 2029. So that's in line with the green policy of encouraging EVs. So that's good. Although that there is a plan to tear back the BIK, naturally that can't go on forever. There's also the introduction of a new category as well for zero emission cars, the A1 category. So that's to attract a lower BIK rate overall. So it's between 6 and 15%. So more details to follow on that, but I suppose I can see why that's happening to encourage transition to EVs.
Okay. All right. Very good, Tom. Thank you. Thank you very much. Neil, is there anything you'd like to end with?
No, just to follow up on that point from Tom, like we had a major difficulty with that last year on a change on an unannounced change on the BIK on EVs, and we had an immediate response from two cohorts of memberships. One on the vehicle leasing side, and the other one was on the sales rep side, people who were just handing in the keys of cars and going out and buying 10-year-old diesel cars. When you're dealing with capital expenditure, and again, this is why you need people with accountancy and tax expertise working in the Department of Finance. You need to give businesses for fixed assets like cars, you need to give them at least, 5 years is an absolute minimum. Or otherwise someone's going to depreciate a car to zero in 5 years. And ideally on fixed and mobile assets, you should be telling the Department of Finance should be telling the market, we're going to give you we would say a minimum of an 8-year horizon on this stuff, if they know what they're talking about, especially where they're trying to invest in stuff like LNG vehicles or hydrogen vehicles or things like that. The capital expenditure involved in moving to those is really, really significant, and you have to let businesses know what kind of time horizon they're looking at from a depreciation and tax point of view. So I know this is kind of limited audience stuff for a lot of your people, but it's where the accountants in the room rule. And if the Department of Finance doesn't get this right, then you have an accountant in a business saying, we are not touching an EV, we're not touching an LPG vehicle, we're not touching a hydrogen vehicle, because it's just not worthwhile.
Yeah, exactly. That's great. Thanks, Neil. Thanks for that reminder. Thank you again, Neil, and thank you, Tom. We'll hand back over to you, Christina.
Yeah, thank you to all of you, and such a fascinating discussion on budget. It was great. I'm sure all of our attendees found it really beneficial. Thank you so much for your time, all of our panelists, and thank you to our attendees for spending your afternoon with us. And look, please do join our newsletter for upcoming news on webinars on auto enrollment. I know you touched on that topic earlier, and we will have further advice on that coming out. So yeah, thanks so much everyone for your time.
Thanks, everybody. Have a good day.
Thanks a lot,
Bye-bye.
folks. Bye now.
Bye-bye.
Bye bye.